Hey, welcome back to the Mining Pod. On today's show, we are joined by Kulyk of Sunnyside Digital to go through all things Bitcoin mining markets after the Bitcoin halving, about ASICs, infrastructure, logistics, consolidation, M&A, and much more in this podcast. Thank you to Sunnyside for joining the show. Before we really jump into it, we do want to thank our sponsors, Foreman Mining, Master Mining, and CleanSpark, America's Bitcoin miner, for being the lead sponsors of the Mining Pod. We'd also like to point you to the Blockspace Podcast Network with the Gwart Show and Bitcoin Season 2. These are more technical shows that might scratch your itch on culture and Bitcoin. So go check those out at blockspace.media today. Okay, a few words from our sponsors and then on to the show. Hey listeners, let's talk about revolutionizing your mining operation with Foreman. This isn't your average management tool. It's an all-in-one solution for reducing costs and significantly boosting your revenue. Foreman brings a cutting-edge dashboard to your fingertips, empowering you with automated energy strategies. This means not only curtailing around real-time prices, but also strategically enhancing your profit margins through demand response. It's about leveraging energy efficiency to its fullest potential. With Foreman, you get a system that scales with your business, inventory management for assets, infrastructure integration, and business intelligence. Foreman elevates the cash flow and production of your entire operation. To see how Foreman can redefine your mining operation standards, visit foreman.mn. With Foreman, you're not just managing a mining operation, you're setting a new standard in the industry. Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Hey, welcome back to the Mining Pod. We're joined today by Kulyk of Sunnyside Digital. Been a long time coming to have this podcast. Taras, welcome to the show.
Thank you, sir. Huge fan, long-time watcher, first-time participant.
It's been probably overdue on my side, but we got you for a good slot because we're post-Bitcoin halving. And I think the goal for this show is to educate Bitcoin miners on what you're seeing from an infrastructure side, what you're seeing from an ASIC side, what you're seeing from marketplace side, so those like demand, supply, marketplace operations that people want to know more about. Before we get into that, of course, got to do the bio and Sunnyside itself. I mean, we're just talking, you've been on Bloomberg and CNBC, so I'm sure a lot of people know who you are at this point. But for the odd few listeners who are not aware.
Appreciate that. CEO, founder of Sunnyside Digital, background, former or reformed investment banker. I worked at BMO and TD Securities in Toronto covering traditional mining and then telecommunications, media, and tech. Was headhunted to join a private family office in Antigua, where I helped build a private mining fleet from 6,000 ASICs to 330,000 ASICs around the world, 7 countries, 21 FTEs. Core Scientific was our largest partner. And subsequently, after me leaving the ecosystem of that said family office, of which I will not name the name at this point, people can dig in themselves and find out. I joined Core Scientific and was their head of revenue for just over 2 years. Helped them bring in about 2.3 billion in total contract value and origination during that time. And then after that, joined a Canadian power generation company to try to build behind the meter data centers, but left after about 10 months when I realized I should basically start my own thing. So Sunnyside Digital, we focus on enterprise, pubcos, large-scale fleets, providing procurement services, asset disposition, so buying and selling of ASICs, infrastructure, hardware, parts. We're doing site operations, site optimization, and the most recent offering that has gotten a lot of uptake is a recent fleet management or fleet refresh program, where we're working with large-scale miners to help them take their hardware off the racks, put on new hardware, clean the existing, refurbish, consolidate, and then sell down into secondary market. So super busy. Really looking forward to the year ahead because the year today has been awesome.
Good stuff. Okay, let's talk about markets a little bit here. You guys operate, I mean, just looking at your website, you guys have your hands in a lot of different markets. So whether it be logistics, repairs, you just mentioned like the refurbishments. Let's talk about ASICs themselves though. What are you seeing at the moment for ASICs from a demand and supply perspective? S21 is like started to move into the market more generally. A lot of these pre-orders have trying to be fulfilled. Is there any movement in this market so far? The charts don't really show much, but I feel like something could be coming soonish.
Yeah, I think there is a lot of skittishness for folks looking to pick up hardware in the market, given where the halving economics have been pretty wild and volatile. Immediately post halving, we had some of the most profitable hash price we've seen to date on the mining side. Obviously, it's tapered off, but luckily, now that some of the fear and weak hands have been shaken out of the market, we're seeing an uptick in BTC. What's even better is we're seeing a scarcity of actual commodity on exchanges. So there's a lot of folks that are wanting to buy BTC, especially with the international ETFs and ETPs coming in without having the commodity to actually buy. So likely we're going to see quite a bit of uptick in pricing, which is really the leading indicator to where ASIC pricing is going to go. So that all of that was to say that right now there's a lot of people waiting and sitting on capital, wanting to refresh their fleets. And that's not just in North America, where we have about 80% of our business, but that's globally. Because as you and I both know, there's with every cycle of ASICs, there's typically a migration of hardware from higher cost westernized countries like United States, Canada, northern Scandinavia, that kind of region, to other parts of the world where there's less rule of law but lower cost of power, generally sometimes even free. But you may not want to have too much capital tied up in heavy infrastructure, just because winds of change blow pretty easily there. But even those places are sitting on hands with capital, waiting for a little bit more stability in hash price, a little bit more uptick on the bull market. But we have been seeing quite a few larger lots trade, but all on UGen. We're working with some large operators to help them sell down some of their older gen equipment as they've already refreshed or in the process of refreshing. So basically, they've been taking off their old gear, putting on the new gear, and now we're working with them to get rid of the new gear to give them more working capital to reinvest into infra and hardware. So that means that there will be more older gen equipment coming online shortly, but a lot of the availability of new gen isn't as plentiful as some people think. And I know that some of the major manufacturers are sold into Q3, almost Q4 at this point. And when that happens, that'll cause a constraint again on the supply side for spot ASICs as well as near-term future orders, which will likely lead to increased dollar per T values within our ecosystem.
I want to touch on 2 points you brought up. One, the refurbishments and knowing where the secondary units go. But first, I want to mention, sort of clarify with you about that rush to fulfill orders once like the market picks up. This has happened in every market. This always happens. Everyone's sitting, waiting for the first person to blink, and then it just kind of catches up. For these investors, what are the metrics they're looking at, and what do you think would be like the threshold for them to get across that line? And you mentioned hash price there, but I'm assuming Bitcoin price obviously is the denominator here at the very end of it.
Yeah, I think if we stay above, call it 65K BTC for a week or two extended, we should expect to see a lot more support into BTC going much higher from there. What that means is that anyone that is in North America looking for hardware, I would not suggest them buying anything below or above 30 joules per terahash or watts per terahash. Main reason being is our hosting rates are generally pretty stable at around 7 cents on a retail to commercial basis, meaning anywhere from 1 unit to 2,000 units. Once you get above that threshold, then you can start having a little bit more leverage as an actual purchaser of hosting or managed services rates and services. So you could probably get below 7 cents. But even then, I wouldn't be looking at any type of hardware above 30 joules per terahash. So looking at J Pro is probably like the best, is the lowest efficiency, and then maybe thinking of either firmware or hardware solutions to try to get that down to 27, 26 joules per terahash, like the Epic UMC control board, or Brains, Vinish, Luxor OS. There's a bunch of high quality firmware that actually works that you could be looking at to maximize the efficiency of older gen, if that's what you're looking at. Trading for newer gen equipment, T21 is an excellent dollar per T option. The issue is three-phase. People forget that it's a three-phase unit. So I've had a few folks approach us and us help
Some
them.
horror stories you can tell us?
Yeah, we've had a few different folks hit us up and been like, we made a bad purchasing decision. We bought three-phase, but all of our infrastructure is single-phase, and we don't want to go through the rigmarole of replacing our PDUs to get to three-phase and the downstream infrastructure and like electrical engineering. So we've gotten lucky with a few of those batches, but for the audience listening, I implore you to work with a reputable broker to help you make decisions based on your existing infrastructure. And not just the electrical, but also the HVAC, thermal management. Like, these are things you should be considering when you're actually doing fleet refreshes.
Do you know much about the differences between the S21 and T21 performance as of now? Like, the specs have been out for a while, but I have heard little about performance between the two.
So S21, anecdotally, people are coming back saying it's a relatively stable platform. The new plugs are one thing, but the actual system itself has been shown to be relatively stable. I know a few folks that have very intensive R&D labs that are pushing them, and they are seeing pretty good results from an engineering perspective. T21s, I think the three-phase has given folks a lot more support for using them in, let's just say, higher overclock and lower underclock situations. The Bitfarm team has been very bullish on them. Ben Gagnon and those guys run a really tight ship. And I know they've been nothing but raving about the T21s, which is why they bet the house basically on the secondary part of their order, which they announced recently. I think it was like another 80 million or 90 million. I forget the exact number, but it's pretty big material purchase for the T21s. So I don't think you can go wrong on either of those. It is a Bitmain product, so you need to make sure your team knows how to manage them, and obviously make sure that your infrastructure provides an optimal environment.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
For refreshing a fleet, where does a secondary unit go after you guys have cleaned it up? There's always the Venezuela stories, but I wonder what's it looking like now.
Well, we don't transact with anybody that's on the OFAC list or any of the sanctioned countries list. Anecdotally, though, the miners do end up in areas such as Venezuela, Argentina, places where there's power that can be found or procured for very low costs or next to nothing. There's some folks that are actually shipping out to Africa. We've done a few different batches out to different countries in the African continent. And I know Ethiopia is becoming a much bigger player these days. And what I've seen from some of our Chinese channel partners, suppliers, resellers, etc., I would never sell to Russia, but I know that Russia has been a much bigger player these days in the mining side. Given some of the historical precedents and stories of Russia, I would be very cautious about doing anything in that region aside from the sanctions issues, just from like a stability and financial risk perspective. I mean, be very, very careful. Elizabeth Warren trumpeting that Iran has become a major player, I think that's a load of baloney. Another one of these fear-mongering things that she does to try to stay relevant. It's like, sit down, boomer. I don't think Iran is a very big player of any kind. They can barely keep their grid operational for their population, let alone for Bitcoin, large-scale Bitcoin mining. So I don't think it's there. I do think it's primarily like different parts of Latin America from the United States, and probably quite a bit of African countries as well that are now starting to utilize their excessive amount of hydropower that's literally just sitting there.
We kind of jumped forward a little bit, but I'm going to tie this into the infrastructure question. Are you mostly like seeing this from ASIC demand, like ASIC shipments, or are you seeing this from other infrastructure parts as well? We had an interesting conversation with the guys at Kardashev Bitcoin, who are a Mexican Bitcoin miner, and they had to import a lot of stuff directly through Mexico and not through the US, but other parts that get through the US. So I'm wondering where you're seeing like flows for other infrastructure.
We've sold transformers outside of US in a pretty material way. We're also selling and partnered with Rosso Immersion to help sell some of their single phase immersion kit globally. There's quite a bit of demand in the Middle Eastern region where they have more energy than they know what to do with. Not necessarily the best operating environment, but with immersion, you can actually manage large scale fleets quite well. And then transformers. There's a lot of older transformers sitting on pallets in the United States and Canada that were never utilized. So those have been actually moving quite well. And so those have been some swift business. I mean, we've sold probably like 10 in the past, call it 2-3 months to different parts. So that's been okay.
That's interesting for the transformers. I was talking with Shannon Squires over at Compass about this. And he said like a lot of that built up demand from COVID has long been gone. I mean, it was the COVID supply chain issue obviously caused a lot of problems. How does the market look compared from 2021 to now in terms of like ordering a part and getting it on time?
Oh boy. So access to parts is one thing. Logistics right now is a cluster. The amount of holidays in Asia, and then there's been all sorts of supply chain and logistics constraints and bottlenecks. Yeah, because of the stuff that's happening in like the Red Sea, the Yemen attacks and the pirates. Like you read that on the news and you're like, oh, that doesn't make an impact. And then you talk to somebody in logistics and they're like, oh shit, yeah. And then the GPS jamming in different parts of Europe. Where now commercial charter flights have to avoid certain areas that have been known to have prevalent GPS jamming or spoofing. All of this actually creates a pretty big impact on global logistics chains.
What is this GPS? I've never heard of this. Is this like,
Which one?
Like Ukraine? Like is this?
Yeah. So different parts of Europe have been affected by GPS spoofing, where I don't know which side it's doing. I'm not going to make any accusations or jump to any conclusions, but somebody is basically throwing out spoofed GPS signals, which mimics GPS signaling to prevent drones, intercontinental missiles, or any type of other GPS-led armament from hitting where it's supposed to by using these signals. It's highly illegal in any country around the world. You're not supposed to do it. Even in war, you're not supposed to do it because of how important the GPS system is. Mm-hmm. But it's war, right? And it's causing a lot of issues. And you can just Google it and be like GPS jamming or spoofing in Europe, and it's a huge issue. And so if you're like a commercial aircraft or a supply chain, part of the supply chain, last thing you want to do is, find yourself over a war zone, because that means you can get shot down, right?
A lot of these Bitmain units that are coming over, or MicroBT, wherever they're made in Asia, are they coming across the Pacific and then being loaded on the West Coast? Because I would assume that would sort of alleviate the problem, but maybe that's not the channel shipments that go through.
Yeah, no, the problem is it's not just the shipments coming in, it's the supply chain clogging that happens when goods can't go across those lanes, right? Also the sea shipment, because the sea shipment is not as stable as it should be and is not as fast. Again, that causes backlog, which forces the logistics companies to start using any other lane they can use. Mm-hmm. And so while usually they might take a sea to go across through Europe and then Europe to North America just because it's cheaper by sea, now they're saying, screw it, I'll just take air from Asia across Pacific to North America, South America, wherever. And that backlog trickles down into the chain throughout all the logistics that we're dealing with. So it's been quite painful. We've seen delays of anywhere from 5 days to 2 weeks on shipments. Luckily, our partners are very good, high quality, but we can't control some of these delays. So for those folks that are actually in the market right now and they have been experiencing some headaches, you're not alone. You can cry on my shoulder too.
Yeah. Like inner U.S. shipments, does that I'm assuming the answer is yes, just compounds, like international affects U.S. domestic shipments.
I mean, if it's like LTL, FTL, no. I mean, that like the road, the highway, unless it's like the Boston, was it the Boston Bridge that just came down by accident, or
Baltimore Bridge.
Baltimore Bridge, yeah, thank you. Aside from that, no. I mean, domestic, just make sure you're working with high quality vendors for logistics, because there's a lot of issues with high value goods moving on roads with sketchy folks behind the wheel, is what I'll say. Make sure you're well insured on your local logistics, because, we've dealt with some very interesting situations.
Love it. Well, maybe don't love that. Let's talk about sourcing best practices. I mean, you've been in the game for forever, and obviously at Core Scientific, you've probably developed a pretty amazing contact list for building out deal flow. What would you encourage a new miner in the space to sort of do when they're looking at these litany of Telegram channels out there for sourcing anything from ASICs to parts to infrastructure, whatever it may be?
Number one, first rule is if it's too good to be true, it is. I've had experienced brokers get stung very recently in the seven figures, because they had someone that they had just met, done a couple deals with, come up with some crazy great deal. They sent material assets over and ended up getting burned. So be very careful when you see a deal on any Telegram channel that seems too good to be true. Number two, do your own research. Find out who you're working with. Make sure that it's a reputable group. Do they have a website? Can you see who it is? Have they been in business for a while? Check their Better Business Bureau score if they're US based or Canada based. Are their principals active? Meaning, can you see what they're doing? Can you find them on different conference circuits? Can you get a referral or a recommendation or word of mouth, like basically thumbs up that these are people you can transact with? Have they been in operation for a good amount of time? Are they brand new entrants? Do they have proper banking details? Can you transact using banking details? Do they have a certificate of incorporation, like basic but legitimate corporate due diligence that you should do? If you're willing to send somebody $100,000, $20,000, $10,000, $5,000, $2,000, that's your hard-earned money. Make sure you're sending it to a group that will deliver and has a reputation that they want to protect, because there's way too many folks out there that play fast and loose with other people's money. We don't. There's a bunch of other vendors in the ecosystem that don't. So just do your research as to who you're working with and know the person at the other end of the line. And when you're doing transactions, always insist on doing a Zoom call so that you've got a live person at the other end, making sure that you haven't been man in the middle on transactions, because that's one of the easiest way to get scammed or hacked. So always do video calls. Anyone on my team, any team that you're working with that's reputable will never say no to a Zoom call to verify financial information at the end of a transaction.
We're going to clip out this part and put it out there, and in 6 months we'll point back to when we hear about some large brokers heist. In terms of like development of the market, do you think it's maturing compared to 2021? I think the brokerage market itself.
Yeah, I think the brokerage market is maturing. I think a lot of lessons have been learned within the ecosystem. I think people realize that you shouldn't take people's money and host in parts of the world where there's no rule of law. That's a big lesson that was learned. Won't name names, but do some research. You'll know what I mean. I think the quality of teams is improving as well, and the experience of the teams as well. Finally, I think the ecosystem itself, retail is still very vibrant, especially with some of the folks that work in retail, but commercial is really stepping up and the institutional side is really stepping up. And that's forcing the existing players to step up their game in regards to contracts, banking, and being accountable to what they're actually saying and doing.
Need ASIC help? Check out Vitamine, one of Bitmain's certified repair shops located in Washington State with satellite offices in Colorado, Oklahoma, and Texas. PSUs, hashboards, immersion setups, in and out of warranty repair, Vitamine has you covered. Want to train your technicians? Bring Vitamine to your site for hands-on training in the art of ASIC repair, complete with Bitmain AMTC certification. Contact Vitamine today at dan@vmasic.com. Again, that's dan@vmasic.com. When you think of ASIC repair, think Vitamine. What do you mean by institutional stepping up a little bit more than to the retail side of things?
There's high net worth family offices, big funds coming in that are doing some of their own exposure via mining. And I know that they have a certain list of demands that you wouldn't get from a traditional digital miner or Bitcoin miner. And when the existing brokers in our ecosystem are contacted by them, it kind of forces you to stand up and say, okay, we need to have like the full package together. So that's what I meant, where you can't just send a quote and expect somebody to close a deal. Like, they want to see a lot more financial information because they do a lot of counterparty risk analysis.
Yeah.
So like, I was on a chat the other day with a fairly large pubco miner, and their whole risk and compliance team reviews every single transaction they're doing. And so that in itself, gave me pause, but also gave me a bit of comfort because we have full contracts, we're fully insured, we're about as boring as they get.
Well, that's kind of how I feel like the entire mining industry is getting. Obviously, it was very wild west for a while, but now it's like just button up, simple B2B plays, which is good.
It is good. It is. I know I had to wear a suit jacket in London last week, but no tie. No tie.
Tie's not required anymore these days.
No.
Okay, let's talk about M&A, consolidations, liquidations, those sort of things. Last year, certainly the year before that, headline after headline about Bitcoin miners going under, Bitcoin miners being bought, Bitcoin miners liquidating their inventory. How have you seen the last 6 months develop? And then we'll get into like what you're predicting in the future. But even before we start recording here, we talked about Marathon, Hut 8, CleanSpark, a lot of these big institutional miners just picking up facilities, picking up infrastructure here and there. Did you have any thoughts or like look back on the last 6 months and think about like how that was developed?
Yeah, I think a lot of the pain was bled out from the ecosystem 12 months ago. Celsius Mining, BlockFi, CoreSci, Compute North, like a lot of those situations caused the rest of the folks that were alive to kind of wake up to the fact that leverage is great until it's not. It's deadly. And that's what we've been seeing in a lot of the ATMs, like at the market equity raises by the pubcos. Again, in London last week, a boomer was like, "Oh, why do you do all these ATMs tapping the market for cash?" And it's like, well, because if we don't, then the debt will basically kill us as pubcos. On the M&A side, I think it's put a lot of folks in a position where they'd rather slow growth but stay alive than grow at all costs, like we saw at peak bull market last cycle. Which I think, again, leads to the conversation we just had around maturity and evolution within the ecosystem. What I think is the same thing I said last week is that I think over the next, call it 2, 3, 4 quarters, we are going to see a lot more M&A, mergers and acquisitions on the pubco large scale side, but also in the secondary market. I think there's still a lot of companies in the public markets that likely don't have an asset base that investors will get behind anymore and will need to either consolidate or be bought or RTO'd from some of the larger private companies. You can go and take a look. Strongholds, let the world know that they're having a strategic review, and a few other folks that are similar to Stronghold, that have aging fleets, won't be able to raise capital, have debt that they can't repay immediately, and that will likely be taken out either for their listing or as a great RTO to consolidate some of the operations they may have. On the services side that we operate in, we're certainly active on the M&A side. We're working on a few deals that will be announced shortly. So we're pretty excited about that. We've done an asset purchase that we're closing on, and we're looking at creating a new co to really have a true A to Z services and solutions provider for the ecosystem. Because the way we look at it is, you look at Riot, CleanSpark, Marathon, Corsair. Each one of these companies are almost a gigawatt of power. They do not want to be dealing with a rinky-dink services partner of like 5 to 10 people that can't scale with the needs that they have. All of them want a large-scale professional services provider that when they call with an ask, the answer is yes. How fast would you like us to execute on that project? Right? That's what Sunnyside is trying to become. We're already there in a lot of ways, but from a services and solutions side, meaning like the repairs, true logistics, on-site operations, parts distribution, that's really where we're targeting, and we'll likely do a raise, our first equity raise, end of the year, Q3, Q4, to bolt on some capital to really be aggressive in the market. And I think that'll be well received by our larger partners and clients, so that they can see that, yeah, I'm diluting, but at the end of the day, they're getting a better partner with stronger institutional investment behind us.
Gotcha. That's a lot of services to provide. Just like,
yeah.
How do you go about building that out?
One by one, execute, deliver, make sure that the SOPs are formed, team leaders in charge, and then going after the next one. Enabling teams to make decisions on their own, knowing that you've hired the right person with the right expertise and the right backbone to know that when they say something, they mean it, and they're able to execute on it consistently in a boring, stable way. Chopping wood. That's right.
I'm kind of pulling like a Bitcoin thing out of this, which is interesting, where these pubcos, minus the capital side of things, where they're able to dilute and raise equity and all those sort of things, they're very thin on teams typically. They don't have a lot of extra staff. They have their core staff to run their sites, and that's about it. And that seems to be where an opportunity for a company like Sunnyside to come in and have all these additional services on top and perform them for multiple different companies.
Correct.
The thing I do want to ask you is, like, why would a company like a CleanSpark or like another large pubco that's out there, why would they not build this in-house? Just for listeners who want to be super familiar with that. Like, I think I kind of understand the mining economics of it, but for a lot of people, they look at like the huge ATMs they do or how much Bitcoin they mine per month. They're like, why are they having these outside companies do services?
Well, the main reason being is that these services are not long, ongoing services that they need day in, day out, and they don't necessarily want to hire up and staff up and increase their G&A component of their income statement on a permanent basis. So, for example, when you rack or de-rack 10,000 units, you're not doing that every week. You're doing that once every cycle per facility or however big your operations are. So it makes more sense, maybe not on a per unit basis, but from a G&A actual working capital cash flow basis over time, to hire somebody to come in and do that for you, working with your existing team, than hiring up enough people to install 10,000 units over a period of 3 weeks. And then they're going to be doing what? Sitting around? That's the issue. It really is a cyclicality OpEx need issue versus having that big of a team to do it anytime you want.
Gotcha. Okay, let's finish up with some M&A talk. Anything you're seeing in the next 6 months? You kind of mentioned some stuff you guys are up to, but are you seeing any pubco moves on the horizons that you can hint at? Maybe not name names, or any thoughts this summer about people going to make some moves?
I mean, the big guys have already made their intentions known that they are active in the market. We have active mandates to help folks either sell or buy assets. So I can't name names, but I can say that it is in the works. And some of these assets are pretty material. I mean, sub 100 megawatts, but definitely close to 100 megawatts. So there will be some pretty big transactions coming up. So it's gonna be exciting. Yeah.
Cool. And you're flying all around the world. Where are some places Bitcoin miners can find you over the next, say, 6 to 9 months?
Well, me in particular, it's TBD, but the team, like Sunnyside as a team, will be at Mining Disrupt, will be at Consensus, will be at BTC Nashville, BTC Amsterdam, AIM Summit Dubai, in Lugano for the Bitfinex conference, and then the Texas blockchain event for sure as well. So lots of conferences coming up. I think also in Prague, the upcoming Power conference. I forget what it's called. Proof of Work conference. Proof of Work Summit. That's the one. Yeah. So anything to do with Bitcoin mining, we're probably going to be there. So look out for the logo this way. Yeah, the logo. Would love to have a conversation. We're always happy to chat, and we love helping good people do good deals.
Love it. Taras, thanks for joining the Mining Pod. Appreciate your time.
Thanks for the invite. Appreciate it.